Ladies and gentlemen, welcome back to Data Dispatch. I hope you guys are having a wonderful day. We see the market that experiences absolute euphoria today after the 50 basis point rate cut by the Fed. Right now, the market is really trying to price in what are the future expectations for rate cuts by the end of the year. And what we've also received was existing home sale data. We're going to be going over that as we've seen mortgage rates that are continuing to drop, making housing affordability more accessible for the public. And how does Palantir Technologies really incorporate into all of this? We've seen it testing resistance at 37. A lot of the tech stocks today, specifically Apple, Nvidia, booming, doing a good job bringing up the broader market. And we have some big announcements from Palantir, but also some insider selling. So lots of opinions out there on the market, on Palantir, things that we all need to cover. So if you are a new or returning viewer, oh yeah, and by the way, we hit 16,000 subscribers. Thank you guys so much. Subscribe for those daily videos. Let's keep it going. 17,000 is the next go. Of course, I'm not a financial advisor. I'm collecting all the data and dispatching it to you. Now pop it up here. Palantir Technologies closes here at 36.83 at about 60 million on that trading volume. You see some resistance at that 37. We saw that today, a lot of resistance being tested there. I think of Palantir in the market continues to be bullish in terms of momentum and buying pressure. Going over that 37.40 is on the table. I think that's incredibly possible. However, with some of the news that we've seen today, actually, we have Alex Karp right here from an insider trading alert that was posted. Alex Karp just sold $325.6 million worth of Palantir. That correlates to 9 million shares. I like one of the big comments here is executive jumping ship, retail is buying the dip. But regardless of that, insiders and what we've seen, big management within Palantir, we see selling when profits are really high. And that's not necessarily a bad thing. Insiders, they do sell for a multitude of different reasons. That doesn't always mean that, oh, they know something that we don't. You know, they're taking advantage of the top of the market, at the top of what the individual stock is. Palantir is just doing really well right now. So profit taking is something that everybody practices. I'm not necessarily scared about that because that is something that we see with many big companies, especially when they perform very well. Now, some of the things that we've seen for positive announcements from Palantir is that they were awarded a $99.8 million, a $100 million contract basically by the United States Army. And remember, Kramer just came out and called this a meme stock, which I think is incredibly funny. But this involves the user licenses for the Maven Smart System AI tool and the ancillary software support in hardware. Now, we talked about this yesterday. According to the Department of Defense website, this is going to be a 5-year contract with a completion date of September 24th of 2029, and that the work locations and funding will be determined with each order. Now, remember, Palantir was previously awarded a $480 million fixed firm price contract by the U.S. Army for the Maven Smart System prototype in May. So continuation of these governmental contracts very well, considering that Palantir's last quarterly results showed that the governmental revenue grew 24% year over year in the second quarter to $278 million. And why I think this is incredibly bullish is because a lot of investors, institutional, retail, all across the board, even the media, is really highlighting on AIP and how that expansion has really affected the commercial side of things. However, we're still seeing the bread and butter, how Palantir really gained its credibility was from those governmental contracts. And we're seeing the continuation and even the evolution of those contracts as time does progress, diversifying their clientele. And speaking of diversifying here, we also have security of the multi-year AI contract with Nebraska Medicine to help revolutionize healthcare operations. And getting into the healthcare sector, I think, is incredibly a big number one, it's controversy because they talk about HIPAA, the type of data that is being shared with Palantir and AIP. However, looking at the possible production and efficiency in all the code, all the billing that goes into healthcare technologies, if Palantir can help improve that, that can be very beneficial for these healthcare systems. And you're seeing here with the methodology right here, this is a new multi-year, multi-million-dollar contract for the AIP and to help improve healthcare through its transformative technologies. Now, this contract right here is going to help build a year-long partnership, implementing more than 10 applications of AIP, helping to improve the patient experience and expanding claims. Now, we've also you see right here, Peter Thiel filed to sell up to $1 billion worth of Palantir shares. Promedia, like I said, there's going to be insiders trading, especially when these stocks are really continuing to perform high. Profit taking is not necessarily a bad thing. You can see on this list here that Yahoo Finance reports that Palantir ranks 9th on the list of the trending AI stocks to buy, acknowledging the potential as PLTR as an investment, believing that AI does hold a greater promise in terms of delivering capital returns due to the fact the demand that we're seeing that is not showing a lot of signs of slowing down. Now remember, Palantir earnings about a month and a half away at 9 cents per share. That's what the estimations are right now. We've seen 11 bullish revisions in the last 11 days. What happened with the market? Let's talk about that. You got the S&P 500, Dow Jones closing at record highs. Now, the Dow Jones right here closing and S&P climbing 1.5% are really taking a closer look, not just at the Fed's decision to start this rate cut cycle with a 50 basis point cut. That is what the market was increasing its probability of, of actually wanting. Wall Street has absorbed the message that the Fed is basically banking on a soft landing. And we saw that with the analyst bar chart from yesterday. If you didn't watch that, go watch that video. Basically summarizing to not panic about current conditions. And it wasn't that the 50 basis point cut was because they were too late at reacting to the market conditions. Rather, they're trying to stay ahead of the curve to help actually go to a soft landing. Now, Bank of America now believes that the Fed is going to cut rates by 0.75% by the end of the year versus the previous 50 basis point forecast. In comparison, the central bank's dot plot, which basically all these people come together, part of the Fed, they dot where they think it's going to be, indicates that policymakers expect 0.5 percentage point reduction. In light of this, and with the Fed pivot here, a weekly labor data report on the initial jobless claims came out Thursday morning today, showed a fall to the lowest level in 4 months, which is showing here jobless claims ended at September 19th, came in at 219,000. Well, it was revised prior weeks to 231. Talking about that, existing home sales, those are sliding in August also. This can be good for rate cuts and helping to combat this. However, reduction in mortgage rates is also important to bring up housing affordability, especially for those first-time home buyers. Now, data from the National Association of Realtors here, they show existing home sales declined 2.5% in August from the month prior to a seasonal adjusted rate of 3.8 million. Now, year over year sales, they're down 4.2%. So even with this anticipation of rate cuts and mortgage rates even going down, we're still seeing existing home sales that are continuing to slide. And despite the overall economy that is continuing to hold up right here, it just shows you that these potential home buyers are remaining resilient to make a purchase until those costs come down even further in the times of some of the poorest affordability conditions that we've seen in decades. Now, talking about and flipping back to the euphoric type of gains that we saw in the market, Apple and Nvidia, big leaders in bringing up the market today. Out of the most market value out of any of the public firms, Apple stock gained 3.7%, tacking on $124 billion to its valuation. To the iPhone, that release is coming out. That could help with this acceleration. And Nvidia stock is up about 4%, adding $122 billion to the semiconductor architect's valuation. You're also seeing other big tech stocks. You see Tesla. You see Salesforce right here. AMD, Broadcom, all up about 3 to 5%. This rally is continuing to surge. Now, one of the big questions, and we've seen a lot of comparisons recently to recent all-time highs before we've seen crashes. We're going to see that, especially as selling pressure. That's going to be the question. When are these stocks too overvalued that we will see a little bit of a pullback or possibly a bigger one? So that leaves me with my questions. Do you think we're going to continue to see the rally here within the next couple of weeks? Or do you think we're going to see a reversal here and some profit taking that actually starts to have a cascade and a domino effect across the board? it's going to be interesting to see what happens. What do you think about Palantir with Alex Karp selling some shares? Does that bother you? Do you think that means that things are turning bearish? Does that, just brush it off your shoulders? Or do you think that we're going to see some different types of volatility? Let me know down in the comments. Peace out, take care, and I'll catch you guys later.